Today on The Next, our guest is Reagan Bonlie, co-founder and CEO of Nudge Money. Nudge Money is a financial wellness platform designed to assist individuals in achieving their financial goals. Prior to founding Nudge, Reagan amassed over a decade of experience at JPMorgan Chase, where he held various roles, including financial advisor in Manhattan and manager of a multi-billion-dollar investment team in upstate New York. Now, I thought this was going to be an AI discussion, and while it's true that Nudge Money is using AI a bit internally as it relates to building the product, specifically as it relates to code review, and they are incorporating it in some ways into the end product as well that they're offering to their customers, these big credit unions. But I was surprised that the credit unions, they're nonprofits, and they also tend to be more conservative, almost technology laggards. And so there's kind of the cultural mindset where they aren't necessarily looking for the tippy tip of the spear, but also there's the regulatory and compliance landscape as well that it sounds like slows down incorporating technology even when the technology is ready. So it was a really interesting discussion talking to Reagan about their approach, how they kind of pivoted from working with end customers directly to working with these credit unions. And we talk about the credit unions and how they think and how they operate and what they want out of technology and out of vendors, and also what they want for the good of their customers. One other angle I thought was fascinating is that Reagan is clearly very passionate about community development, especially in underserved communities. And it really shows in terms of what's important to him, but also with the mission of Nudge Money and how they're going about building it. So the right investors, for example, aren't necessarily going to be the ones who are blitzscale, capitalism at all costs, tippy tip of the technology spear, automate everything. And it's much more around community development, one brick at a time, in it for the long haul, mission first, and just thinking about how that human element will intersect with the technology and automation that is and will be taking place is just a really interesting intersection, and one that I think deserves a lot more attention. At any rate, I really appreciated Reagan making the time, and I hope you enjoy this one. But before we get started, I'm Jason Jacobs, and this is The Next. It's not really a show, it's more of a learning journey to explore how founders can build ambitious companies while being present for family and not compromising flexibility and control, and also how emerging AI tools can assist with that. Each week, we bring on guests who are at the tip of the spear on redefining how ambitious companies get built, and selfishly, the goal is for this to help me better understand how to do that myself while bringing all of you along for the ride. Not sure where this is going to go, but it's going to be fun. Okay, Reagan Bonlie, welcome to the show.
Thanks for having me.
Thanks for coming. We got introduced, I think, through Ben Carcio, right?
That's right. Yeah.
Yeah, and you had asked for some advice, and we had a nice chat, and what you're doing seemed pretty interesting and relevant to the stuff I'm exploring, so here we are.
I was excited for the conversation. You are taking a very interesting path to fatherhood and building companies, and I'm excited to continue the conversation.
I am as well. Yeah, I would have been excited to continue it without the microphones, but if we're going to have a great conversation, we might as well share it in case other people get value from it as well.
Sounds great.
Great. We'll take it from the top. What's Nudge Money?
So we help credit unions uncover and convert growth opportunities and help them achieve their financial wellness mission. We do that by helping them analyze data from their members and then reach out to them in a very personalized way. And what you find is that the vast majority of financial institutions, about 9,000 in the country, they struggle with that process, understanding their customer and reaching out to them in a personalized fashion. And it's what people are asking for. They don't want the cookie cutter approach to having their bank reach out to them with product recommendations. They actually want some guidance along the way, and that's what we solve for.
Yeah, and before we get into anything Nudge Money specific, one thing I noticed is that you worked in big banks for a long time, right?
That's right. 12
And
years.
so is this your
JPMorgan.
first time doing something that's not a big bank?
No, I blame it on my father. He helped me sell mistletoe at the age of 5, door to door, and that transpired into auto repair businesses and air conditioning companies, which I exited. And while I was at JP Morgan, I opened a luxury beauty supply business, which I scaled to $500,000 of revenue, gave that to my parents so they could retire. So I've been constantly doing different things. This is the first scalable SaaS company that's aligned with my passions and the most expertise that I have. Yeah, been around the block, but first time specifically in SaaS.
So did you have the idea for Nudge Money before you left JP Morgan?
I did, yes. So I had always had the idea that most of my time there was in wealth management, and I realized that the right recommendation at the right time can really help someone take the next best step in their financial journey. And I did that for hundreds, thousands of people over my time there. And I realized that the data is there and people just need the right message. And there's a platform for that. We just need to make it happen. And it took quite a while after I left the company to realize, okay, it's not in an app, it's not in a chat bot. We can actually do that by helping marketing teams improve the way they communicate. The idea's always been there, but really putting that in practice and learning more about the industry came after.
So was the reason that you said your goodbyes at JP Morgan because you had this idea and wanted to pursue it full time?
Not entirely. In fact, at that time, my father, he's had some heart issues for quite a while. So I realized that's a good opportunity for me to spend more time with my family and then also work on Nudge at that time. So it was a little bit of a dual purpose. And at the end of the day, got to help my parents, help them grow their business a little bit, and then really focus on Nudge Money full time after that.
Got it. And just to set the stage, what was the timing around that? So when did you leave JP Morgan, and then at what point did it switch from kind of a side exploration as you're being caregiver to to something you were actually going to take a run at?
Right as I left, I was deep in the weeds helping my parents with health as well as helping them with their business, because there was that business that I started, the luxury shampoos, that there needed some work in that company. So I'm sitting there. It was mostly operationalized, but I had to do a little bit of work there. And I naturally got antsy. There was where I'm working 60, 70 hours a week for many years, and obviously had these ideas bubbling. It took probably 2-3 months for me to really start formalizing the MVP and product and idea and building up the team, but it wasn't too long after I left.
Huh? And when was that?
June of 2022.
Got it. And so what was the initial germ of an idea, and maybe take us through some of the twists and turns that have come from that initial germ?
Yeah, interesting. So back to my point about the right message at the right time, part of that is having the right data and having the right platform to communicate that. And we first thought, okay, we need to gather the data to understand more about the member, the user. And we found that to be quite a journey. So we had thousands of different people that would test our product through an application. So they would come through and put various different details, ultimately connect their accounts through Plaid and what have you. And we realized that was quite a long journey of communicating and ultimately understanding the full picture. Then we also learned that apps in general are a competitive space. Many people don't have an app. Generally, there's about 90% plus attrition in the first couple of days from downloading an app. So you're more than likely going to delete that app in the first few days. So we realized, okay, it's a difficult business to be in. The data will be challenging. And we realized through our conversations with credit unions that we can connect to their data directly through their core processing systems and get pretty much everything that we need to better understand them from what products they need, what financial wellness challenges they're going through, and then how we can leverage behavioral science to create a powerful message. So it took a little while for us to MVP that app and test it out in the market with thousands of individuals to then realize that, okay, there's better ways to collect the data and then communicate that as opposed to just an application.
So I'm gonna try a simplified explanation of what I think you're doing, just as a way of testing whether I think what I'm hearing is that you, as a financial advisor, you served a lot of clients one by one and found that consistently there were parallels in the type of pain they had and the types of answers that could help fill in gaps to give them better financial health. You thought that by, almost like what Uber is to private cars, that if you did that in a more automated way, you could serve more people and get more leverage around the same message. And then, unlike wealth management, you need to find other ways to make money, but from a much bigger base of clients.
Yeah, that's right. And it doesn't need to be only financial wellness focus. Obviously, helping people make decisions on their finances moves them in the right direction. But often we find that the people that are communicating these products and these recommendations for a new savings account or CD or a personal loan, they're doing it in the wrong way, which is try our 4% promo offer. But most people, they can't understand if 4% is good or bad, if how that impacts their financial goals. Is that going to help them achieve something better? As opposed to where we can look through the data and say, okay, someone's car broke down a couple times in the past few months. Their other data points match to say they probably need a new car. And by the way, they have some children because we've seen where they're shopping. We can say that, how would you feel if you can get from point A to B in a more reliable car for your family? So really changing the perspective and putting their goals in mind as opposed to just pushing a product with interest rates that are not going to resonate with people.
And then once you started where I just said, and then it sounds like you uncovered that the going direct to consumer route was possible, but crowded and hard for a bunch of competitive and behavior change reasons. But if they're already going to these credit unions that they trust, that you could arm the credit unions to essentially do what you initially were thinking of doing direct to consumer. Is that right?
Yeah, that's right. And we can help the financial institution, the credit union, at the same time, because they need the help with understanding their members more and the marketing help. So we can help them with both of those things and then help their members. That's all aligned. It's a win-win scenario. Obviously, there's a lot to unpack in that entire process. But yeah, that's essentially right.
And what have been the biggest inhibitors to consumers having a good handle on this stuff historically? And then same question in terms of what's been inhibiting these big credit unions with lots of resource from just solving the consumer's problem like you're trying to do.
There's a lot of reasons why consumers may be having their challenges, whether it's they need to build an emergency fund. Vast majority of Americans don't even have $400 set aside for an emergency. Paying down debt, it's may seem intuitive to some people, but it's how to navigate that process and which debts to pay off first. That can be challenging, how to negotiate with creditors. There's a number of various different financial goals that you want to achieve from buying a car to a home, and that education process is where you're going to get it. You can walk into a credit union, many people don't understand that. There's some nonprofit organizations that will help, but oftentimes people are there without the support. Working through a credit union helps us help their members, essentially. And the inhibitors for a credit union to actually do that is that they have a lot that they need to accomplish. They have a long list of things to keep up with the market. So growth and their mission, which is financial wellness, are the two priorities for most credit unions. And it's a lot, especially for the ones that have limited resources or budgets. So they have to fix their technology stack. They have to make a competitive digital experience. They have to improve their sales process, their marketing, along with a laundry list of other challenges. So where we can come in and simplify a lot of that, the big challenges like data and marketing, that helps them really accomplish more and overcome many of those inhibitors that they've experienced in the past.
Now, are these credit unions for-profit institutions?
No, they're nonprofit. Yeah, they're nonprofit. So the difference is they work similar to a bank in the sense that they have their products and services and their team, and often in the branches, but the additional revenues goes towards lowering the cost of fees or interest on various different products, providing more interest on savings and CDs and things like that. And then all of that additional revenue stays in the membership. They're owned by the members as opposed to shareholders. So that it's mission alignment between our organization and theirs.
And from an incentive standpoint, what's the pitch to the credit union in terms of why they should incorporate this? I get maybe the answer is mission, but I'm sure there's a lot of things that could help the mission, and so figuring out which things make it over the line and how to prioritize them, I'm sure is a challenge. So how do you make sure that Nudge Money is at the top of the list?
Oftentimes their number one objective is growth. They do need to grow and stay competitive, and it's not only for their credit union, it's for the whole movement, the credit union movement, which serves 140 million Americans just in the United States, let alone other countries. So there's a lot of support in the credit union and the credit union community to help those, particularly small credit unions, grow. So when we can uncover those opportunities and help tee up the marketing to convert, that's quite a powerful message for them. And then at the same time, if we could do that in a way that drives financial wellness, that helps them achieve their top two priorities. But there's a lot of ancillary benefits to that, which is simply understanding your member. Who's your average customer? That can help you improve your branding or your messaging to speak to who you need to be talking to. And one of the challenges that many credit unions have is that they're attracting an aging population where they need to attract the younger population. And there's going to be trillions of dollars that are transferred from older populations to younger populations here very soon. And if credit unions are not appeasing to the Gen Z population, then they could be missing the boat there. So there's growth, financial wellness, but then also just a general understanding of how to operate your business as a credit union.
And in the earliest days, how did you balance building versus customer development, and how did you get confidence that they would meet in the middle? And then similarly, there's so many different things you could be solving for these customers. How did you think about prioritizing, and also how did you think about staging?
The last thing you said was staging?
Yeah, so here are the things that should be on the list, and then here's the order in which we're going to do them.
It was a lot of customer discovery. So we had a lot of conversations, literally hundreds of conversations with executives and ancillary channels and consultants, people that really understood the space. And then we would build towards what we're learning. And sometimes it took us to put it live in a credit union, and then we might not even get feedback for 3 months. But hopping on the phone with them and asking them pointed questions because we've understood their business by that point helped us uncover, okay, this is something that is really standing out. And by the way, we've heard it from 3 other credit unions. That's what we need to prioritize. So it was a lot of learning individually with credit unions, but then also in the market in general, understanding really their needs. And it took us a while, honestly, to gravitate from our big lofty mission of driving financial wellness at scale down to the really solving the burning pains today of credit unions. And if we solve that, we help them grow. That helps us achieve our mission. And then ultimately we can have at scale drive financial wellness, and that's where we're headed.
And Scott Weller, who I think I put you in touch with recently, but when he came on the show, he was talking about with Enfi in the earliest days how they actually formalized having, what did he call them? Design partners, right? These big lenders who they didn't take everybody. They kind of handpicked who they thought the best partners would be not just on fancy names, but based on philosophical alignment and true interest in collaboration and understanding that the 0 to 1 phase, it's going to be messy, right? And being okay with that. Did you formalize anything like that? Did you dabble with a bunch of people? Were there certain firms that you really rolled up your sleeves and worked closely with? And was that more on an informal basis, or did you formalize that structure in some way?
We did, yeah. We had 3 design partners throughout took about a year. And one of the things that we formalized that, which involved integration, security, white labeling our solutions to their credit union, testing, iterating. So yes, that took the better part of a year. And we so happened that our 3 design partners were on 3 different core processors, so we're juggling various different integrations. But what came out of that was outstanding feedback that really drove the product roadmap and helped us integrate with solutions that gives us access to about 22,000 different credit unions. So now we can very clearly grow and help more credit unions along the way. Without a 6-month integration process, now we can literally go live in a couple of hours. So it's a lot. We gained a lot of insights from that process and have streamlined our ability to go live with credit unions along the way.
And what were the biggest learnings from that experience? And if you had to do it again, what would you do different, if anything?
There was so many learnings. I think integrations being one, that just who they're currently partnered with gives us some insight on what types of technologies they'll adopt and what types of challenges we can face. So luckily we ended up with the right partners, but identifying that earlier on could have helped us get to that point a little quicker. Security was a big thing in this space, and I don't think that was enough. There was enough people verbalized the concerns for security, but we eventually became SOC 2 compliant, and I wish we had done that a little bit earlier. I think it's just that stamp that carries some weight in our space. One of the things that was very interesting that took me quite a while to learn was that even though financial wellness is the mission for credit unions, growth oftentimes takes a front seat. And that's simply because they have to grow to help more people and then stay competitive in the industry. And that was something that we had to learn over time. So really getting on the same page with our partners as it relates to their goals helped us really build a product that adds value towards really their top 2-3 priorities. So I'd say those are some of the bigger ones. Obviously, we've learned a lot along the way as well.
And do you feel like you've landed on a product that can serve the top 2 or 3 priorities across the landscape of potential customers, or is it really there's some saying if you've met one family office, you've met one family office, because every family office is wildly different from the next. Are credit unions similar, or do they have a lot in common in terms of the rhythm, how they think, their expertise, their pain points, etc.?
I think they tend to have similar challenges in ranges of size. So their assets will dictate roughly how much revenue and profitability they have. So many small credit unions have the same problem, which is under $500 million of assets. And then you tend to find similarities with credit unions that have maybe $500 million to $2 billion, and then $2 to $20 billion and up. So we've built a solution that it adds value all the way to the top 10, but in different ways. The smaller credit unions and medium-sized credit unions, we can add very robust data insights that are akin to what you would find at a top 10 bank or credit union. So we can provide them that insights and help them generate personalized marketing. And that serves a big population. So just small and medium, that's about 4,000 credit unions. And then once you get to the very top tier, that they've already have a process for analyzing their data and understanding their members, they're still struggling with the personalization piece. So how can we generate personalized messages at scale? incorporating behavioral science. That's something that we're not even finding at the top 10 financial institutions. So there's certainly applications all the way to the top 10 right now. We're spending our time with small and medium, and we can help them accomplish a lot there.
And just in terms of the way that you've gone about building product, it'd be interesting to understand just how much your approach mirrors how you might have done it before the age of AI, and where, if anywhere, AI is being leveraged as part of that process. And then same question as it relates to the offering itself and how affected you are, for example, by the underlying landscape of the LLMs and so forth and all the change and accelerating speed and all that. And was that kind of a sideshow, or is that very relevant for Nudge Money?
Yeah, lots of great questions there. I'll start with how we build the product, and then specifically in our industry, how AI is evolving. Building the product has been pretty consistent. Obviously, we have the GitHub Copilot for code reviews and things like that, but that's sped up certain components of the development process. But we're still, through SOC 2 compliance, we have to maintain a structure and a process for reviewing and deploying code. And we have quite a robust technology, multiple applications. So it's improved to some extent, mostly on code review. And I'm the least technical person on my team, but that's my best understanding of that. Our application is a number of different technologies. We have interfaces to visualize data. We also have member-facing tools to help them manage their goals and what have you. But the technology behind it is we have some very straightforward algorithms that spit out very simple insights, such as total balance of a particular account or total number of actions on a certain financial goal or what have you. And then we have machine learning, so analyzing various different data points to identify opportunities. And then we leverage NLP and Gen AI to create messaging and a number of different things. And that helps us provide a ton of value, really, at the end of the day, in a number of different ways. But how that relates to the industry is that we need to be very conscious from a risk standpoint and really a risk appetite standpoint and an integration standpoint as well. So first benefit for us is that there's a very high barrier for entry. So it's very difficult for startups to come into our space and to have success really at all. There's about 4,500 credit unions. There's about 8,000 vendors like us. That means that you have the vast majority of them that don't even have a single credit union under their belt. So now that we have several, it provides us the platform to grow. But looking at our technology, we need to be risk conscious for our credit unions. Many of them want to be very careful when they leverage any Gen AI at all. They want to be very careful about where the data flows. And oftentimes the integration is not built in such a way that you can easily leverage things like AI agents. So there's a lot of opportunity. I think the industry will just, because of their speed of adoption and the way their integrations are set up, it'll take some time before we even get to scalable AI agent applications in our space. For us to be able to machine learning, Gen AI just for creating messages helps us really accomplish a lot. And then we'll obviously be on the forefront of innovation when the integration rails provide us to put AI agents in that space.
So I'm hearing a couple things that I just want to clarify. One is, it sounds like you could be leveraging AI to build a lot faster if it wasn't for compliance, but you're hamstrung by compliance because in order to stay SOC 2 compliant, I think you said, there's a bunch of things about the existing process that need to stay in place until the certification process or criteria changes. Is that true?
We definitely have to follow a process, and it's a little bit slower as a result of SOC 2. We primarily leverage the AI for code review, which speeds up things. But for building interfaces and tools or models, we're not really leveraging AI for that. especially in our space, we have to put out good product. And if the code base is not consistent with what an AI is spitting out for an interface, or our branding is not aligned, or it's just not, I don't know that AI is at the point where we can feasibly bring it in to build interfaces or models or things like that. I think it's more from a code review standpoint where we're seeing the efficiency. That's what I've heard from my peers as well, but that'd be something for my CTO.
Talk to Scott about that, yeah. Because it sounds like they've got a whole agent fleet internally that's actually writing the code. I'm not a technologist, and nor do I come from either of your worlds, so I'm still getting my brain around what's possible, and then it's what's possible technologically, but also what's possible in terms of comfort, privacy, legality, risk, exposure, liability, right? There's consumer perception, right? There's a bunch of kind of non-technical factors that also come into play that are real. Yeah, and right now it is weird. The answers are wildly different. You have one camp that's just foot on the gas, it's go time, woo! And then you've got another camp that's a bunch of noise and hype and grift and one foot in front of the other and easy cowboy, ignore most of that crap, right? And what is the truth? And then if the answer is it depends, then what does it depend on, right? That's all the stuff I'm trying to understand. And it's fascinating just how wide-ranging people's views are that are smart, that are each smart and well-placed in their own right.
Yeah, I'd like to say that we're foot on the gas and easy cowboy. And so we move fast. We have a team of 7 developers, and we just make sure the code quality is great. We put out really good product. It adds value. We listen to feedback, and we iterate quickly. We haven't seen an application for AI to improve the development process of our technology. Also, specifically in our space, feedback loops are a little slower. Sometimes it takes a little while for our technology to get in there, sink in, add value, and then for us to really understand where we need to make iterations. But I think that's driven a very consistent roadmap and development process and allows us to stabilize to make sure that we have good quality products that have consistent uptime. I think we're a little bit of both in the right way, essentially.
What are you hearing from your customers? Because, for example, I talked to some, like just one guy in New York, he's an AI consultant, and he's seeing from his customers that they're like, oh crap, we're behind, we got to do something. What? We don't know, but let's just, and it's almost like panic spending. You know, it's the equivalent of like stress eating. It's like you're not necessarily hungry, but you're just so stressed that eating carbs gives you peace of mind. Just spend something on this AI thing because we don't know anything and the world's going to pass us by, right? And I think because of that, you see some of the worry about the inflated numbers of some of these early breakout AI companies, right? Is that because is this real durable revenue because the body's accepted the organ, or is this tire kicker revenue that's gonna churn more than normal once things stabilize, right? And like and granted, financial services more conservative, and then I would imagine that the nonprofit side of financial services is even more conservative, right? But what are you hearing from your customers?
Yeah, no, it's a great point, and I think we had that panic mode a year and a half ago where we were, hey, we got to incorporate more AI. We had AI.
You being not from your customers, but you feeling that
from us, yeah, our company, our startups, and we were there before ChatGPT became popular, and we saw that trend move, and then there were pockets of all the fintechs are now incorporating something, but then the something was a chatbot, or it was something that didn't really add a lot of value. So while we went through that small moment of panic, we realized that when we leverage AI, it needs to add value. Because just simply incorporating the word AI, in fact, if you go to our website, you'll see one mention of it, and you got to look for it. And that's because we tailor it to our audience. Just saying AI, maybe it helps from an investor standpoint, but not with small and medium credit unions. Oftentimes, they want the consistent, proven process as opposed to just incorporating AI for the purpose of incorporating AI. So that's mostly what we're hearing. At the same time, I think we have to bring AI in to their comfort level and slowly help them realize there are massive efficiencies by leveraging this, you can create copy better, you can personalize your experiences, you can infuse behavioral science very easily, and we're messaging that to them as opposed to the other way around.
So when you see these bold proclamations about what are humans going to do with all their newfound free time, or Armageddon because all the jobs are going to be gone, right? How do you think about that? Do you think about maybe in some pockets, but it depends and not in my pocket? Or do you think in my pocket too, but not yet? Or do you just think the whole thing is a bunch of crap?
There's so many different applications and industries and jobs to look at. Certainly there's going to be things that will, even the ghost kitchens, the AI ghost kitchens that you're hearing about, Travis Kalanick. Hey, maybe that's put some chefs out of their jobs, but I spend most of my time thinking about the credit union space, and they are, from an efficiency standpoint, oftentimes quite behind. So our ability to leverage AI to get them up to speed is where we're focused on. And very often are we working with a credit union that has a small marketing team or no marketing team, and marketing just doesn't get done, or it doesn't get done as efficiently or as impactful as it could be. So for us to leverage a team of 3 marketers and get them to execute as a team of 10 without impacting their jobs, it's improving their jobs. I think that's where we're seeing the biggest opportunity. And that's all the way upstream. It's not even the tiniest of credit unions, it's at the top 10. There's some operational inefficiencies to be able to have a better marketing impact. So that's where we're focused. I don't think there's anything that's going to take people's jobs. It's just really going to amplify and allow them to do 2-3x what they were doing before.
Huh? Yeah, man. I'm glad we're having this discussion. I think it's sense that it kind of flies in the face of a bunch of the hype that you hear about, but it'll be interesting when we put this out there what kind of reaction you get, whether, and I guess it depends on what camp, right? But there'll be some camps that are like, I told you, it's a bunch of hype and crap, and there's other camps that are like, oh, like those credit unions don't know it, but their days are numbered, and like they're too behind to even attempt to catch up at this point. And it's same thing. Will the institutions of today be the institutions of tomorrow? Mm-hmm. Higher ed, banking, mm-hmm. CPG, automotive, airlines. Like how this is the tail end of the Industrial Revolution, and we're heading out on the next wave, and there's a whole new way to work and live. Is that true, or is it going to be a lot more incremental than that? I don't know.
They're very valid points. I think there are certainly nuances in our space where you think about the $100 million credit union compared to the JPMorgan, the Bank of America of the world. And yeah, they're not going to compete from a growth perspective or maybe not a technology perspective, but the value that $100 million credit union provides in the community is immense. They can't get people that struggle with certain financial challenges. They would normally get a 30% interest on an auto loan, can get it at that credit union for 12%. That is a world of a difference to certain people. And I just spoke with a credit union CEO that was very much like that. And he was quite passionate that about if their credit union went away, that makes an impact on thousands of people in the community. So it's not about keeping up, oftentimes, it's about making a difference. So I think that's something that we need to think about, is that there's not just going to be a mass exodus of small financial institutions. It's how are they actually positioned in the communities that they serve, and what are the things that they need in that community from a technology standpoint, service, product standpoint, to effectively grow and help more people. Yeah, it's interesting to think about.
It's such a weird analogy, but you know how they say that like dogs tend to resemble their owners? Do startups that sell into certain categories end up resembling the categories that they sell into? Would it be counterproductive and almost overbearing if you tried to blitz scale and pound your chest and be at the tippy tip of the spear and innovation and overcapitalize and hire quick? And do you operate your company with lower blood pressure to mirror the blood pressure and pace of the companies that you are doing business with day in and day out?
That's funny. It's a very interesting question. I think to some extent that's naturally happened, and you've only made me realize
you have a calming voice. I'll tell you that, Reagan. I don't have a calming voice, but you have a calming voice.
Maybe I should make my volume peak a little bit more. Yeah, I'm passionate about the space, and that comes naturally. Is that I really do what I do because I believe we can make a difference, and so there is true, genuine mission alignment with the credit unions. And yes, I think we started our business kind of pushing our way into the market from a sales standpoint, and it started a lot of conversations, but I don't think there was as much conversion, and we didn't bring on as many credit unions as we probably could have. But we've had to change the tone. Literally, I went to a conference last week and we had a booth and everything, and we did the whole strategy on more conversations, and then we realized literally in day one, people are there for relationships, and we changed that mindset very quickly, and wow, we came out of that with some strong partners, some really good new friends, just build genuine relationships that, yeah, they can turn into new clients, but we're strengthening our position in the community, and I think that is incredibly valuable, especially in our space. Second to that, like how we operate our business, yes, we can go pedal to the metal and invest in a significant amount of growth. I think the lighting money on fire is probably not the best approach nowadays. I think there's more steady methods of growing at a quicker and more efficient pace. And this is not only just a business that I just started. I'm going to push it to its limits and let it implode. This is a passion for me. So I'm going to operate the business in that way where I can continue to serve our friends, partners, the credit union community, and then grow it in a reasonable, sustainable fashion, which will get us the ramp and acceleration that we really need to prove ourselves, whether it's angel investors or VCs. But I think in this environment where you don't need to spend millions of dollars a month, you can, really accomplish some growth on a more cost-efficient way. I think it's possible.
You don't want to share, but it'd be interesting to know how much you've raised and what the source of capital. I'm not looking for any names, but just, was it venture? What kind of venture? Was it individuals? What kind of individuals? And then directionally, how you would think about capitalizing the company. And the reason I ask is that from my seat, it's not I used to think when I was a young entrepreneur that it was like, the goal was to raise from the fanciest VCs that you could, right? And actually that's not the goal. The goal is to figure out what kind of business you're building and then have the best fit for capital sources at the best times. And fit isn't just dollars or help, it's also expectations and alignment around the pace, alignment around the timelines, alignment around the culture and philosophy, right? And so you want to be as selective about that as you are when choosing a team. Again, I'm not saying this is how you should think. I'm saying this is how I think, right? But I'd love to understand how you think about it.
So on the first point, we raised a little over $500,000, and that was really just from what we needed. That came from a VC. We had former CEO of FICO, Larry Rosenberger, invest in some angels. I put in some money as well, and so that's primarily that, and that got us very far. We have a robust team, very brilliant people, hyper cost efficient. We were able to build an enterprise ready, security grade product and put it in credit unions. And we didn't need millions of dollars to get to that point. We were able to do that in a fairly challenging venture capital environment and be cost efficient along the way. So our path forward doesn't need to be so robust from a cost standpoint. We can leverage our relationships and partners to grow, and our process to get into the market that's cost efficient. Remind me of your second question.
What type of capital do you think is the right capital directionally?
In our space, there's really little funding from a pre-seed to a seed standpoint from idea up until where we were, call it about a year ago. Now that we have several clients and we're growing, there's recognition and all the stability that we need in our space. There's more investment in our space, in the credit union community. But there's a bit of a black hole from incubating companies like in our space. Path forward is possibly growth oriented VCs, still angels that are aware or familiar with our space, whether it's fintech or marketing or credit unions. And then there's credit union related VCs. So that would certainly be an opportunity for distribution, and those VCs are funded by multiple credit unions. So that is an opportunity to partner, learn, but at the end of the day, we are very efficient from a cost standpoint, and we don't need tens of millions, hundreds of millions of dollars of capital. Like, I think we can very steadily continue to grow without big VC checks moving forward.
Uh-huh. In your wildest dreams, Reagan, and I know we don't have too much time left, but what does success look like for Nudge Money in the long term? And long term can be however far out that you dream about.
From a hard number standpoint, we're aiming for 400 credit unions in 5 years. And we have the components in place to achieve that. That will ultimately drive impacting more people from a communication standpoint. So we'll help the credit unions grow. We'll help more people achieve their financial goals along the way. And those are really the main drivers that get us to our mission of helping more people.
Uh-huh. And then, in that scenario, if you did that, what kind of, and just ballpark, like what kind of revenue run rate are we talking about? And also, what size of team would it take to support that type of customer base?
That I'd have to dig into my financial model to identify the size of the team, but that's about $55 million of revenue in 5 years.
My sense, and I guess I'll say it as a statement, but it's really a question, is that you're not just a pure glass-chewing capitalist, that community and impact really matters to you, and I respect that a lot. I guess my question is, given how much I'm hearing from you that matters to you about the product, but also about how you're building the company, is that something you track? How do you know if you're actually delivering those results to the end customers that you're serving and fulfilling the mission versus just selling to a bunch of credit unions and stopping there?
We provide value primarily to the credit union, which provides value to their member. Oftentimes, we hear the stories from our credit union, but we're not directly communicating with their members. And we have stories of members that have achieved their goals, they've purchased homes quicker, simply more members taking action on recommendations that are being sent from the credit union. That gives us indication that we're on the right track for that. And simply just more actions taken on an email or more opens on a particular message that we send. That tracking is going to improve over time. But again, at the end of the day, as long as we're helping the credit union grow, we're doing our job, because these are credit unions that historically haven't been growing as much as they could have been. When they grow, they attract new members and they serve more people. And that's additional money in their pocket, that's better products that are being recommended, a better overall economic environment for that individual. So there's a lot of different ways that we can skin that cat, but we know we're doing our job.
Yeah, it's an interesting philosophical question to think about, like in the battle of like tight-knit, interwoven, interconnected community and just like glass-chewing technology, cost, efficiency, whatever, like what wins, right? And I think all the Silicon Valley bros assume that, of course, tech wins, duh, right? And I don't know, like that's one takeaway I have from this discussion, is that I think maybe those people are underestimating the power and importance culturally of community. Or maybe they aren't and just don't give a shit, right? That's another option too, but I don't know. That I'll have to let that marinate. That's not a takeaway I was expecting, but it's a real one.
I think it depends on the space. You can certainly have the tech bro win in some social media space where, for us, it's pretty clear that if you do the right thing, you attract better, you deepen relationships with your customers. And that's, the Bank of America's proven that, dozens of other financial institutions and fintechs have proven that. So we're giving that opportunity to our credit unions. And then we take the same position. If we do right by our partners, our credit unions, then that just helps us grow in the space. I think it's probably sector dependent, but I'm going to marinate on that too.
For anyone listening that's inspired by your work, how can they reach you and who do you want to hear from, if anyone?
Yeah, you can find me on LinkedIn, Reagan Bonlie. our website, www.nudgemoney.com. And who do I want to hear from on your podcast?
No, who do you want to hear from in your inbox?
Oh, in my inbox.
Yeah, two, yeah. I'll have to reword that because that trips people up frequently. But yes, I meant who do you want to, if anyone's listening that's inspired by your work, are you trying to hire? Or do you want to hear from investors? Do you want to hear from credit unions? Is there anyone that would be useful for you to hear from?
Yeah, we're always open to conversations with investors. I'm not sure how many credit unions are going to be listening to this, but we always love to talk to credit unions and really anyone passionate about the opportunities to do good and grow at the same time in the banking space. Marketing, behavioral science, like those are some things that are passions and big components to what we do every day. But yeah, always love a conversation.
Great. Anything I didn't ask that you wish I did, or any parting words?
I think you covered it all.
Okay, Reagan, thank you for coming on. Congrats on everything you've built with Nudge Money. Looking forward to following your progress, and reach out anytime if I or the next can be helpful in any way.
Thanks, Jason.
Thank you for tuning in to The Next. If you enjoyed it, you can subscribe from your favorite podcast player. In addition to the podcast, which typically publishes weekly, there's also a weekly newsletter on Substack at thenextnext.substack.com. That's essentially for weekly accountability of the ground I'm covering, areas I'm tackling next, and where I could use some help as well. And it's a great area to foster discussion and dialogue around the topics that we cover on the show. Thanks for tuning in. See you next week.